Let's start with utility. I don't understand what it even means.
Everybody has some kind of utils in their head that they're calibrating.
There's hardly anything that hasn't been used for money.
In fact, there may be a fundamental problem in modeling what I want to model.
My name's Eric. If people have heard of me, it's probably because of my blog, Mobile Dev Memo, which I've been running for like 12 years. Started out basically just entirely focused on like mobile free-to-play concepts and really expanded over the years to cover concepts related to like the digital economy. Call myself just an independent analyst. I don't call myself an economist because economists get angry when I do that because I don't have a PhD. But I'm, interested in topics related to how products grow, how digital advertising ecosystem delivers value, and how companies can sort of succeed given the various dynamics at play at the interplay of those two things. I wrote a book called Freemium Economics.
An oldie but a goodie. It was one of the first ones out there. You and Will Lutton had another book, this consultant from the UK.
Yeah. I mean, it still sells like reasonably well, which is shocking. It's funny because I wrote that thinking like, well, okay, I'll get like 2 years of mileage out of this. And like to this day, I mean, people will bring it to conferences when I'm speaking and ask me to sign. So it's pretty cool to see that the kind of has had a longer shelf life than I thought it would. I mean, there's stuff that I'll go in and read and it's like embarrassing, right? Like, But I think for the most part, I think I'm being objective. I think it holds up. But the funny thing about that was when I wrote that, there was not this sense of inevitability with free to play or freemium, right? It's called freemium economics. I think people thought like this is a flash in the pan. I mean, this is a trend, this is a fad. And I mean, I think I was like pretty steadfast in my commitment that it would be the way that consumers engage with content, just because of ubiquity of the growing, the sort of the coming ubiquity of smartphones. I mean, that would make more sense than trying to sell stuff. Like you just give it away for free and then monetize the people for whom it delivers the most value and find ways to deliver more value to individuals based on their behavioral patterns. And like, what's cool now though is like there's resurgence in a lot of those ideas because of the personalization capabilities that a lot of the AI tools bring to bear. So yeah, anyway, I wrote that book. I run the Mobile Dev Memo podcast and then just,
Python tool. Let's not forget that.
And Theseus. Yeah. So I'm the creator of Theseus, which is like a open source Python library for marketing cohort analysis.
Can I give you my interpretation of following you and like how I've like composited you and see if I'm wrong? My understanding, this is just my recollection, is that you did a master's in econ in Estonia. I think you worked for Skype after that. There's the digital chocolate phase, there's Rovio, and then there's kind of like the consulting turn. But then I hear like all this other stuff, like you're going back and you're doing a master's at Harvard, which is super interesting. You're continuing to write, you're doing more investing. And I'm curious what it kind of like adds up to. I know your wife is Estonian. That's very interesting. You don't talk about that a lot. You play Call of Duty Warzone quite a bit. You have like one piece on product, which I find interesting, on Ultima Online, and everything else has been really geared towards advertising. So I find that curious too, like why you don't write more about product. These have been the things that have puzzled me over the years.
I feel like Phil's fanboying out hard.
I know you live in Austin. You've mentioned that once, and you're like about to buy or rent an apartment or like an office.
This is kind of creepy, Phil.
You mostly got it right. So I did a master's degree in London at UCL. So UCL is part of like the Russell Group.
Mr. Bentham?
Yeah, that's right. Good.
Did you see the body?
Yeah. Oh yeah. It's right
What body?
It's right in the main building. So the body of Jared B. Bentham is encased in glass in the main building of UCL.
Like the actual, is it like preserved with like formaldehyde?
I think it's preserved. They've got a mask over his face, so it's not, you're not seeing like a skeleton, and he's wearing clothes, but like that's his real body. And then, so what I did was that degree was fully funded by the European Commission, and this was back when the UK, yeah. So but the UK was part of the EU at that point. It was before Brexit, and so the deal was we did our major coursework at UCL, and then we had to go to like some partner institution for like the thesis, and so I ended up going to Estonia to write my thesis, and then met my wife and then got the job at Skype and stayed in the region-ish, went to Finland and worked at gaming companies. Other than that, and now I live in Boston because I'm a student at Harvard.
Are you a Patriots fan yet?
No, I'm not a football guy.
Does the Red Sox, the Celtics, is anything grabbing you? Bruins.
I've been to a couple of Red Sox games. It's fun. It's fun to go to Fenway.
Do you have an opinion about Dunkin' Donuts?
I like Dunkin' Donuts. Yeah, I like it a lot, actually. I still prefer Starbucks, but if there's a Dunkin' on my route, I'll grab a Dunkin'.
The Dunkins on the East Coast are way better. The Dunkin' Donuts on the East Coast are way better than they are everywhere else. I used to think that my friend who lived in New Hampshire was an idiot for saying the Dunkin' Donuts was good until I had Dunkin' in Boston. I was like, oh, okay, this is not terrible.
Why did you decide to go back to school? Why was that important to you?
So I'm doing a program called Applied Computation. It's in the engineering school, and so it's like a mix of like CS, math, and stats. And the reason it was important to me was that I saw that my interpretation of like the rise, I guess, or just the sort of AI's kind of application to everything is that you can't understand how AI will provide value or how it'll even be applied in like a systemic or substantive way unless you really understand what the underlying math is. And it really started to worry me, especially with the fund, because I was getting pitched on AI products that I had no ability to evaluate. And I do think there is going to be like a reckoning with a lot of these AI tools that are getting funded now that have like no substance to them that go to zero. And I think that will be entirely a result of investors having no idea how to determine whether these are legitimate products, whether what they're doing is even possible, whether what they're doing even really invokes AI. And I can give a good example, right? So I got pitched on this product, and this was part of the reason that catalyzed the desire to go and learn these topics. I got pitched on this product, and it was, I won't give too much detail away, but like it was essentially like it was an AI play, right? It was an AI thesis. And I have a friend who's an investor in my fund, but he's also just like a person I trust, very much with respect to like his investment acumen. He's a fantastically successful investor. And I was like, you look at this with me, because I don't know if I understand how or why this could work. And we just kind of dug in, and like we didn't do that much diligence, right? Maybe like an hour or two. And we just kind of dug around on like LinkedIn, just seeing who's employed at this company. How are they, where did the founders go to school? Like, I mean, they were promoting their AI bona fides. Like, where did they go to school? What did they study? And it was like that level of superficial analysis. And it was immediately obvious that they were lying, that there was no substance to what they were pitching. It was not AI. They couldn't be doing this with AI. They didn't have the technical skill set. They themselves, they weren't employing anybody to do it. And they were employing a lot of people that seemed very obvious to be freelancers who were just basically like doing Mechanical Turk type stuff. And so we passed. And a month later, they raised a massive seed check from like one of the most famous investors in the world. And my immediate thought was, it'll be harder to detect these fraudulent pitches in the future. Yeah. And I need to understand what's going on here. And like in the process of doing, just a master's degree and learning a lot of stuff that I didn't know. I mean, I studied CS in undergrad, but I didn't study machine learning. And certainly, the transformer architecture, self-attention. I mean, this is 10 years old. This goes back further than, or my undergrad studies go back further than that. And it's changing so fast that you just like, not only do I want to understand these topics to make, just hopefully like, profitable investments, but I want to build in this space because it's really, really fascinating.
Is there a big market for lemons in the AI startup world where like people, it's like hard to tell what's legit, what's not, and kind of everything gets kind of polluted because of that?
I would say it's not. I don't know if I call it a market for lemons. I would say that it's almost the entire market is non-viable. Like almost everything that's being pitched is non-viable. Like almost every investment you see that is sort of like it claims to be enabled by AI is misrepresenting what it's capable of doing. And so, but they're like the two. I mean, this is like the kind of just general distribution of venture. But like in any sort of like sea change, like this, in free to play games, this was like this. But not to the extent that people were misrepresenting what they were doing with free to play games. It's just that there were going to be a couple companies that won, and everything else was going to go to zero. Well, with the AI, the difference is, I mean, people are actively and knowingly misrepresenting what their companies do and their ability to build what they're claiming to build.
Would you say there's like two issues? One is overpromise of a technology, which is like not unique to like startup world. I mean, you had Web3, you had mobile gaming before that, like a ton of insane promises that didn't end up coming true, but you still end up with a market. You still end up with a very valuable industry. It's just not worth the trillions of dollars that was promised. There's that, which is kind of a tale as old as time. But there's also with AI, like I have found it's harder to figure out whether somebody actually knows what they're talking about when they're communicating to me, especially virtually. It's like, okay, are you looking this up? Like, did you do a little bit of research before this with Gemini? Like, what's the actual level of expertise? And I imagine that team that you talked to was doing a ton of work with AI, vibe coding or just vibe chatting with the AI about what a technology would look like, what would a founder know about, what are the different, features of a good product. It's almost impossible to tell whether somebody you're talking to actually knows what they're talking about. You almost kind of need that degree or whatever it is.
Why does this matter though, right? Like, what has been? I'm curious what the confusion has been. Like, if I think about a company like Cosmic Lounge, like they're the ones making the AI Match 3 puzzle, right? And they're pretty open about what they're trying to do, which is like build an engine that you can generate assets into. I think they're trying to build other components that Match 3 developers would find useful. I mean, are those things covered by LLMs, or is it just like, hey, we're building like the Monte Carlo simulation? But if I think about a company like that, what do you think is wrong about, I guess, what are you looking for in like bullshit detection? Like, hasn't the argument always been like there's going to be this model layer, or at least that thesis is becoming increasingly clear that there's the model layer and there's going to be the application layer, and those things are different values in the value stack?
Right. There's a big difference between AI vibe coding a demo that runs locally on your machine and vibe coding a product that can be delivered to 1 million people.
People put so much effort into the facade that they could have probably actually built a real product in that time, right? But not an AI product, because they can't. I mean, I would say that, if you think about and look, I mean, I think people have, been shocked, right, by like just the eye-popping size of the salaries that Meta has been offering to machine learning researchers, quote unquote AI researchers. But don't forget, there was a team of people that quit Google because they got so rich off their bonuses that they never needed to work again in their lives. And this was like 7 years ago, right? This isn't really that new. I mean, what's new is the access to the compute. That's what's new, and the ability and the access to the data in order to train these models of this scale, right? But the value of these individuals, and there are maybe like, I don't know, the kind of person, like, so a person who could devise like a frontier model, there's maybe 100 of those, I think, I would guess. The people that could train a model, and build the architecture to advance an existing sort of model, there's like 1,000, right? And that's it. And so, like, by definition, when you're getting pitched on AI, an AI product where the person claims that like we're building a foundational model or something, and it'll be, the odds are just against that being possible. But like, it doesn't take long. I mean, and this may sound like condescending, but I could just look at someone's LinkedIn and know almost instantly if they're lying or not, because there's just no way they could have the capacity to do what they're claiming with an undergrad degree in CS from 15 years ago. And it's not to sort of denigrate like, their education. It's just to say that like they are not part of that group of people that can do what they're claiming to do.
Yeah, they haven't written 50 publications on machine learning applications.
Now you're getting a master's in machine learning. I stalked your LinkedIn, and like 10 years ago, you got a master's, you're studying electricity markets. I'm curious, how do you think the growing demand for AI compute will impact electricity markets?
Oh man, that's funny that you asked that. So I bought all these electricity trading books this summer because I do think it's going to introduce a lot of volatility that could be profited from. And I was telling a buddy of mine who's a professor at MIT, we were having lunch, and I was like, yeah, I got all these books. I'm excited because I think there's going to be this opportunity to trade. And he was just like, what, you like the new Enron or something? Like, why would you want to do that? It can't be very fulfilling. But yeah, no, I think it's going to introduce a lot of volatility and a lot of demand too. I mean, you saw Microsoft did that. When you talk about like the CapEx that these companies are spending, I mean, it's just like almost unfathomable, these sums of money, incomprehensible, these sums of money. I mean, Oracle just did that $300 billion deal with OpenAI, and Facebook saying they're going to invest $600 billion in infrastructure. And it's not just data centers. It's not just GPUs. A lot of this is electricity, getting access to electricity. Microsoft did a deal with the nuclear provider in Washington State to get access to the electricity. I mean, it just takes a tremendous amount of electricity to power these things. But I want to go back to the other point, because I think there is a fundamental distinction here between, like, if you look at these, you call it like innovation wave. You talk about free to play as an innovation wave. I think it was, and that was something I was very excited about. That's just a new business model to my mind. And I think the distinction here is AI is far more systemic. I mean, this is going to have deep consequential implications for society going forward. It's not an innovation wave per se. This is a structural realignment of society. And so like you can make money off of that, sure, but it's going to change the way that we engage with technology fundamentally. It's going to change the way that we engage with each other. It's going to change the way that we sort of like understand our perception of self. And so it's like, if you want to deeply understand this stuff, it's not just reading machine learning papers. I think it's digging deeper than that. It's thinking about like the construction of the human psyche, the construction of the sense of self. And it's not just a matter, and I'm not like an AI doomer by any, I'm the biggest AI stan. I'm the absolute biggest AI cheerleader that you've ever met. So I think like we should be moving faster than we are. But the thing is like, I think if you want to think about the opportunities, it's not like, there's a new business model that's going to enable people to play games on their phone, and that will sort of piggyback on the mass availability of smartphones. And so there's an opportunity there. It's not that discrete opportunity because there's some new form factor that makes it possible to engage with the content this way. It's going to change the fabric of society. And so there's ways to make money by investing in companies that. But it's not a market. It's not a product. It goes much sort of deeper and more conceptually powerful and like profound than.
I think back to your AI stages of marketing piece, which I thought was really great, and I like always go back to that as like a realistic, sobering view about where we are in terms of the AI evolution. And it feels like marketing is like sometimes always the first best customer for some of these things. Sometimes we say that for gaming, but sometimes like marketing's willing to like get in, roll around in the dirt, crank out some like AI icons. I've been seeing it on Instagram. The amount of AI ads are incredible. I mean, the whole creative, and it's going deeper and further up into the pipeline. But right now, like we haven't seen, for instance, like personalized fatuis. Like I remember when Solstein was called like, what was it, 5 traits or 6 traits? Like I'm going to see this ad, it'll have an emotional resonance, and then it'll be in like a personalized fatui. And like none of those things really came true. And when I think about those sobering benchmarks, the fact that even those visions haven't been realized, I have a hard time squaring that with this is a fabric of reality change, because where are the things now that would suggest that this is the case? Is growth supposed to go to the moon at some point? When I look at the evidence in front of me, I struggle with it.
Right, but that's because these are existing product paradigms that are trying to apply AI, and you can't do that. You have to build a product from first principles with AI. And so if you think about that's, and no, trust me, it's happening. There are fatuis being personalized with AI, right? But you have to think about like how would that impact the entire user journey, the entire economy, and like put aside games, because I think games is a very specific case. So here's where I'll tell you I'm not at all excited. I'm not all excited about content production for games using AI tools, diffusion models. It's not exciting. That doesn't create value. That's just saving costs. I'm not excited about the use of diffusion models for creating ad creative. Right? I wrote a big piece about it the other day. I mean, because it's obviously relevant, but I don't think that creates a lot of value. Just reduces cost. Right. What I'm excited about and what my research is focused on is hypothesis testing using AI. So how can I actually figure out what a resonant concept is without actually having to test it? That saves me money, but it also drives more value because I'm going to come up with a better concept, hopefully, as a result of that. Now I'm going to reach a different audience with that. Now think about if I'm hypothesis testing on the creative, the very top of the funnel, where else am I applying those learnings? I'm applying those to the fatui, I'm applying them to the onboarding, whatever you want to call it. I'm applying them to the economy. Right now, there's diffusion, generative tools that probably allow me to personalize the things that they see, but that's not really the value creation. It's the things that they are exposed to in the first place. Is determining those things. Right now, I've worked with companies that are working on how to implement the personalization in the fatui, and there's like a lot of opportunity there. But when you start thinking about a product that genuinely realizes value, real value, not just saving costs, but actually deriving value from these tools and these concepts, it's actually built from the ground up to do that. And those will come to market at some point soon, but they're not there yet.
When you say hypothesis testing, do you mean generating the prototype more quickly or using AI to evaluate the prototype or something else?
Yeah, mostly using an LLM to try to distinguish between concepts that have been used in the past to determine which will be successful, and then using those to create derivatives or to create, parsing apart the actual qualities of the concept that maybe are not even perceptible to humans, right? So there was a really good job market paper that I read. I'm trying to get the person that wrote it on the podcast. He did this, but not with ads, but with headlines. I want to say it was Upworthy. I think it was the publication that they published all of their headlines, and they always used to A/B test every headline. And so what he did was, and you can read the paper. I'm blanking on the name, but there's a job market papers is pretty long, but he just fed this into an LLM, and he didn't tell it which one won the A/B test. It was like try to parse apart the concepts that you think would have won, and it produced headline and then create headlines based on here's some news stories, create headlines on that basis. Right now, you think about how you apply that to ad creative, it's really exciting, and so that's kind of what my research is focusing on in this program. But like, I think it's that's going to be like basically transformative. I think if you think about and we kind of root this in games because it's a gaming podcast, but like if you think about the process for doing creative testing, it is very easily biased by the limitations of the humans conjuring up ideas, right? Like you walk into any team, and usually any UA team, right? And usually like, there's a creative meeting, and it's a Monday meeting call. Hey, we got to come up with some new creatives. Go around the room. What are the ideas? And it'll be the head of creative or the sort of creative director, but you'll also have like managers. You also have the analytics person, and it's just like and people just conjuring up stuff. Now, obviously, that's going to be there's going to be like just serial correlation there. I mean, it's just going to be like, oh, what do we have done in the past, and like, maybe I can change that a little bit. And then the other piece is, well, let's bring in some competitor ads. Let's just look at what they're doing. Let's go through Facebook ads library. Oh, we should just do a variant of that, right? Now that works, and it you could move the performance in sort of like marginal ways, but you're not going to conjure up wholly new concepts from like ex nihilo from that, or parse apart pieces of the concept, aspects of the concept that actually drove performance that not necessarily easily perceptible just by looking at them. And I think that's where a lot of and that's not generative. I'm not running a diffusion model to create the thing. I might do that later, but the real value is coming up with the concept, and I'm not tethering that in this like serially correlated way of like, well, we did this before, and so that's kind of what I'm tethering my ideation to.
So there's this idea that Drakesh asks quite a bit, which is that like we have all these models right now, and we've fed them the whole body of like human corpus of knowledge, and they haven't been able to invent anything new yet. I think the suggestion of that question is it becomes bearish, that we've already gotten this far, and why haven't they been able to invent a new vaccine or to advance even methodologically in some sort of field? It feels like those results are really small.
What do you mean
right
not
now.
invented anything new? They've like produced plenty of stuff.
When you think about like purely original thought, like at the forefront of a field,
they've advanced like the cutting edge, some matrix multiplication algorithms, and like some abstract math problems like sphere packing and stuff.
Anecdotal evidence that, hey, I'm a math professor. The AI model helped me clarify my proof for a particular theorem. I have seen that, but relative to the hype and what I would argue should be happening, if we believe in AI to the degree that we seem to have faith in it, why hasn't it been able to do more of this? It feels like its impact on GDP is like pretty modest right now, and I guess I would expect more with all this knowledge.
So I don't think the impact to GDP has been modest. I think it's been substantial. I think it's masked a lot of weakness in the U.S. economy. I mean, a lot of this GDP growth is driven by AI investments. Yeah. Now, that's not AI output. That's not AI performance or whatever. That's just investments in AI. But you can't. I mean, that matters. But I think that's a good question. I think it's a function of the prompt, right? I mean, if you think about like so large language model, I think people like. You can't conflate AI with large language. First of all, the AI is a meaningless term. It doesn't mean anything. People use it as a catch-all. I mean, most of the time when people talk about AI, they're talking about either pretty boring machine learning, but that's just being pursued with a massive amount of compute. So the architecture of the model can get larger essentially, and therefore find sort of like more nuanced patterns and process larger amounts of data. Or you're talking about like a lot of times people are talking about LLMs, right? Which are a very specific model. And the thing about an LLM is, you build this on the transformer architecture. It's using self-attention. It's taking some tokens, and it's simultaneously sort of like observing all of them. And then what it's doing is it's just probabilistic at coming up with the next token based on this set of tokens. And then it's appending that token, and it's running self-attention again. And then it's picking, it's just running like a classification process to determine what the next word is, come up with the best one, and then append that, and then run the whole thing again with the entire token context. And so like, well, that's just prediction. That's just step ahead prediction, right? And so, well, why would that? If you just said, hey, find me a vaccine, like, well, what are existing vaccines? And like, well, I could change something about this, essentially that's what it is, right? And so, like, because I mean, LLMs don't need to run with text. So a token can be anything. Token's just a vector. I mean, it's a embedding, right? So like, it could be anything. And so, but that's a function of prompting. but I would say LLMs are one, sort of application of this, but like, I wouldn't say that like large scale deployments of machine learning haven't done anything new and novel or been applied in new and novel ways. I mean, they certainly have.
LLMs, in terms of the predictive capabilities, to me are just mostly consumer grade products. Like I was listening to music in the car the other day, and Spotify DJ came up, and I didn't know that was a feature. It's a new feature. It's basically their version of, it's a really fancy kind of personalized search model that I can prompt it and say, oh, I'm in the mood for this type of music. Can you play a couple of these things? Basically just repurposing a bunch of Spotify's algorithms, but they're using an LLM to make it more interactable and more kind of social. I look at a product like that and I agree with Phil. I don't see that pushing. I see it accelerating Google search. I see it accelerating, development of apps. I see it, it is on the output side of things, right? The production function, like A times capital times labor. It is accelerating like how quickly each unit of capital and each unit of labor can produce output. Eric, you mentioned some interesting like mathematical concepts, and I am curious about like which areas of research can these types of models improve. It's just sped up the process that I typically would take. I'm starting to dabble in like software. I'm starting to dabble in helping engineers write code and interpreting code that I get from engineers. It's making our process much faster, but are we inventing anything, or is the AI inventing anything, should I say? I haven't really found that personally, both in my consumer life and in my life as an employee of a B2C business. I'm kind of on Phil's side in terms of the like applicability.
I think there's like two maybe they're competing thoughts here. It's like, is this, so like I can't go to ChatGPT and have it invent a new vaccine for me, like solve some human scale medical problem. It hasn't solved cancer yet. Okay. It hasn't done that. You're right. Can accelerate the efforts of 10 cancer researchers to discover a solution to cancer faster than it otherwise would have happened. Well, okay. So is that valuable? Yes. Is it on its own curing cancer? Probably no. Right. And that's kind of why I talk about like prompting is really the question here. But then the other thing is like, so yeah, it's got value, but so like, okay, is that transformative though? Accelerating the timeline or making people much more efficient. Is that transformative? And I would argue, yes, it is. Because now imagine that, these 10 cancer researchers who have PhDs in biology or whatever, molecular biology, I don't know what a cancer researcher looks like in terms of profile, but these 10 cancer researchers, if there had been 100 of them, they would have discovered this cure for cancer on the same timeline that the 10 do, assisted by AI. Like, okay, there's value. There's obvious value there. But the thing is, like, now, can I become a cancer researcher without going and getting a PhD and doing all that stuff? Like, maybe that's maybe a more interesting idea here. Or is there like an agent that is itself a cancer researcher, right? Who it's imbued with all the knowledge that a human would have had to acquire to become a cancer researcher, and I can just spin it up with like an AWS instance or something, and that's working on my behalf, right? And so now we don't have 100 cancer researchers in the terms of output because we have the 10 with AI, but we have 1 million or 1 billion cancer researchers, right? Like that to me is really interesting. But the other question here is now, okay, take it away from cancer research and say that I can allow like this workflow that is imbued with all the knowledge that any person would need to acquire to become like the absolute world's leading expert in that domain. That is available across all specializations and in ways that were previously sort of like excluded those people from the economy, right? And that to me is like really interesting. So the example that I've used, I did this podcast like a while ago called Commerce at the Limit. Now, if you think about like the typical sort of like setup, and this has gotten like sort of easier and more seamless over the years as a result of companies like Facebook and Google investing in these automation tools like Performance Max and Advantage Plus. They just made it easier to spin up marketing, right? To make it to sort of like bring all the component pieces into one place and like press a couple buttons. Now you still need creative, but even they're moving in the direction where you might not. You still need some analytics, but they're moving in the direction where you might not. Now that's great. That made an existing team faster and an existing team more efficient. But once it gets so seamless that you actually make that practice available to people that were otherwise completely excluded from it. That is where it becomes transformative. And so this commerce at the limit idea I had was like, think about now every solopreneur in the sort of the physical economy, the person selling haircuts, like the person running a halal food truck or whatever, halal guy's food truck. Those people now can advertise. Those people are brought into the advertising economy. That is truly transformative. And so like, it's not just the sort of access to this corpus of knowledge, because that caps out at some point. And maybe it already has.
Why does that level the playing field? Why is that the equilibrium? Because if everyone has an agent, now I'm just investing into the better agents, right? Now our agents are duking it out, and that's reflected in relative prices and click through and like all the normal things we know with the marketing apparatus. You've made the point that personalization is what unlocked like a lot of these mid-sized PCG companies, and a lot of what went away with ATT was their ability to target and to go after particular subgroups. But I'm not sure what spinning up an ad creative does in equilibrium. If I'm Scopely, I'm gonna buy 10 agents to spin up ad creative. I'm still gonna insert marginal dollar equals marginal benefit. That feels like it's virtually a perfectly competitive market in advertising. Even if there's a new IP, people will rush to the Supercell meta or the Supercell art style or the Fisher Price art style, the Royal Match art style. Like everyone really rushes to that the voter median theory.
What I think he's saying is that right now there are n equal 1,000 and equilibrium is E. What he's saying is like n equals 10, n equals 100.
But you're still bidding on a scarce resource, though. You're bidding on time. You're bidding in time and relevancy, right? And feel free to take me to town on that. But like that is scarce. You're trying to still fit all of that production function. You need to graph it onto that scarce resource. I'm skeptical that this new equilibrium is going to be more enhancing for the halal guys versus the Scopeleys or the Last War guys, whoever it may be, a big advertiser, to employ the same model and still scale it with capital.
So there's a couple of things. So the advertising economy use case is very specific, right? So there's two things, right? So in that podcast, I talked about, you're expanding the size of the economy of advertisers. More people are participating, whereas before they were just excluded, right? And so that's growing the advertiser base. But the other thing you're doing, and what these companies are doing as a result of these tools, is they're actually making targeting better. So yes, the resource, the resource is the constraint, right? The resource is like the diagonal line, which is time and attention and just availability of these ad impressions. But actually what's better is the pricing power. Is like I'm going to better reach these individuals. Now you take this to the physical economy, where these people, not the digital economy, to the physical economy, the barbers, the local restaurants, or whatever. They're a lot of that now. They can bid on this inventory that otherwise probably went unsold for people that like are maybe not attractive. From Banana Republic doesn't want to bid on me because I don't look like an e-com shopper, but I live in that area. There's more advertisers because they're empowered with this ability to advertise. There's also more advertisees or people receiving advertising, people that were otherwise not targeted because they weren't seen as economically valuable for e-com.
I think about that as price discrimination. Then is that how we think about and model it? That we're reaching people we wouldn't otherwise have reached. Like this is the matinee discount for seniors.
No, because it goes the other way. The intentionality goes the other way. I'm not trying to like change consumer surplus or reduce consumer surplus. I'm reaching people that were not, there was no economic value in reaching them before because they're not an e-commerce shopper or they're going to play a game, but they do need to get their hair cut.
It's probably difficult to like distill the impact of AI into one economic concept like price discrimination or shifting the production function to the right. Like I did want to get back to this. I think we can
totally map it to our normal models. Why can't we?
Well, I don't understand. I'm just saying, like, you're trying to, it sounds like you're trying to distill it down to like, oh, is this price discrimination? It's like, yeah, well, it's price discrimination.
I think we have a tool set to understand it. And I think this has been the disappointment I've had is I don't think economists have taken enough advantage of this and trying to model this out and think about like where this all ends up. I'd say the same thing for Web3, by the way.
It depends on the economist that you're talking to. If it's a macroeconomist, they don't care about this because they, like I said, they just start taking A and they're like, this just increases A, it just increases production. If you think about like a labor economist, what are they thinking about? They're thinking about the marginal productivity of labor. Okay, MPL goes up, probably going to also increase marginal production, marginal revenue increases.
There's the economic impact, but I think just going back to like why it's not price discrimination, because it's not that those people are not paying. It's not that an ad being shown to that person is a function of their perceived value to any given advertiser. Right? And like, so if they're not getting an ad, usually it means that they're not clearing some CPM floor for when the platform would deem like interrupting the native content to be worth it. Right. And so like there are people that are not being advertised to. It's like it's not because the product doesn't become any cheaper. It's just because the universe of products like where they were in the targeting group, it's determined by the platform that they just wouldn't convert at any rate that made it that because the sort of the price that's paid in advertising is based on an auction, right? And so, but the bid is adjusted by the conversion prediction. And so whether this person will convert or not. And so like they were just perceived to not convert on any of that stuff because they're not an econ shopper, they're not a gamer, but they do live in some place and they need to go get their haircut. And so they're adding inventory to the system because previously just no ads were being shown to them. They're going to free ride, right?
There's a relevancy that was never being reached.
Right. But even if you take that piece out of it and just the targeting gets better and there's more advertisers being brought in, and let's say that like, well, you're going to have to displace the ad that's currently being shown to this person, right? So like there's no CPM floor, so something's being shown to them. Well, the targeting getting better just probably allows more relevant things to be shown to them. And so you're creating more conversions. Now the thing here is like, well, and I've written about this, like, let's take this to some, sort of like theoretical extreme or some unrealistic extreme, where these platforms get so good that there's always an ad available to any given person that would convert with 100% predicted probability. So every ad, well then, okay, you can't show that many ads because what happens? The person's going to run out of money. So if every ad could be so relevant to them that they would definitely click on it, they would, and then very, very likely convert and buy, they actually have to show fewer ads, right? So you're actually winning some of that. You're winning some of that time back as a consumer. Is that, well, okay, now let's say that, I was being shown 1,000 ads a month. Well, now I'm being shown 20 and my expenditure is the same because there's such good ads. Well, now I get more time with my social media instead of seeing the ads.
So do you see that as like the biggest impact that AI will have on gaming? You don't seem interested in, you mentioned you don't think that it's going to have a big impact on like productivity. That's not interesting. Like, oh, cool, we can create more art assets times as fast as we could before. What is kind of the marginal productivity of workers? Isn't that interesting? It does seem like search and finding, higher return on ad spend seems like the highest potential for AI and video gaming.
That's going to be transformational for gaming. It's just like, and then the ability to build more varied types of games. So like if you think about that targeting becoming very good, right, based on like preferences. Well, then okay, I can sort of explore the whole preference space with development because it's become a lot easier to just develop stuff, right? And then I'll map those games, these new genres of games or whatever, stuff that people wouldn't make before because there's not enough of a market to it. But if I can meet the 5 people that I'll pay $10,000 a month, well, maybe there's a business there. Whereas before there couldn't have been because you're not going to find those 5 people. Not 5, but like, call it 500. Imagine a game with DAU 1,000 that made $1 million a month. Like, is that unrealistic or is that just not possible now because we can't find those 1,000? And they never churn. They will play that game for 30 years.
So to talk about the marketing piece for a little bit, because I do want to talk about like the core econ piece, which I've been reading you for a very long time, and my favorite, I don't know, Seufertism. I don't know. I think you're ready for like a branding on some of these catchphrases. That all marketing is performance marketing has been something that I go back to all the time. Right? You can always look at any marketing dollar, regardless of whether or not it's direct response, with a cost benefit analysis lens. You're always trying to drive growth with spend. Mm-hmm. What I'm curious though is I still don't know, because you're also very charitable to what we might consider traditional brand advertising, non-direct viewing. Like you take a sarcastic tone with it, but it could work. Like that's something that kind of comes across in your writing, and I don't have anything specific in front of me. But I guess like if I think about you managing a marketing budget, how do you even think about something non-direct response advertising when you don't have the opportunity to run incrementality tests? When you don't have the opportunity to apply that performance-based framework onto it? How would you approach something like that? Like, is the Super Bowl useless? Is that like no man's zone? Is that never profitable? Like, under what conditions can we think about these type of things as profitable for firms?
No, I think the Super Bowl probably drives a lot of value, right? I think so here's what my take here is that you shouldn't do something if you have no hypothesis around how it can be measured. And I'm not saying you need, a priori, you need a perfect solution to that. I mean, you can't have one, but I mean, what's your approach? What's your mental model for how this drives value and how we can test it, how we can measure it? And like that just should be a precondition for spending a single dollar on marketing. Now, for direct response, the problem is a lot of people just take that as, first of all, as precise, which it never was. I mean, even pre-ATT, it never was. And also you miss a lot of the interaction effects, right? So like, I definitely see brand advertising is really important, even for digital products. I mean, I've written about how a lot of times the difficulty of measuring that gets seen as an excuse to not measure it. And so, well, we have a vague sense, we have a gut feeling that this is going to drive value and it's going to make this other stuff more valuable and more performant. But, since we can't really measure it, just give us a blank check. I mean, just let us do it. And that happens a lot. I mean, people accuse me of using a straw man when I say that. It's not. I've seen it. Yep. Right. And it's common. And so that's corrosive, because that just makes everyone feel like they have less, that there's less of a requirement for them to be, to justify their existence. But yeah, I think so. How do you do that? Well, first of all, you formulate a way to measure it. You can. I mean, you said like if you can't do incrementality testing, but most times you can. I mean, you can. You just have to figure out how to do it, and it's hard. And it's this persistent thing that you have to do all the time. It's not a one-off. But if you can, and since you can, you must. And then if you do that, well, then you can measure the impact, or at least. Or at least come to me with a lot of assumptions, like, and then just let me, I can't necessarily test the assumptions, but I can use my accumulated experience to tell you if those assumptions are reasonable or not, right? So like an assumption would be, well, I mean, we can't do perfect incrementality testing, but what we can do is we can segment parts of the US, and we can, here's some assumptions. The assumption is that the behavioral patterns are similar within these regions, and there's similar size, similar GDP per capita, similar cultural sensibilities, and like that's an assumption that I'm making, and then that's how we're going to do the test. And it's like, okay, well, that probably seems reasonable. But now if you're picking Missouri versus California, I'm going to say no, that's not reasonable. But if you're picking things that like you can justify, you can make the case, that's probably okay.
If I follow this like down the funnel, I mean, shouldn't the phrase be like all spend is performance spend? Because why wouldn't I follow this down the funnel and think about this for A/B testing like a product feature? Like there's nothing about this that's specific to marketing. Isn't it? Shouldn't we take this approach with everything?
Well, what do you have in mind? I'm not sure I follow.
So like consider that I'm a product manager operating on a game, and I have X amount of capital that I can spend towards acquiring users, or let's say spinning up another team. All spend is performance spend. Like I'm always trying to get high ROI there. It's just a question of having a falsifiable belief at which one will give me the highest return.
Isn't that like strategic finance?
I think it's just capital allocation, right? But there are games, like particularly PC console, where this is really hard to apply. This is something I struggle with quite a bit. HD companies almost never have A/B testing. If they do have A/B testing, it's maybe on a small segment of the store. How would you approach that for something like that? Like for Battlefield. Battlefield's coming out. If you're a marketer on Battlefield, what are you trying to prove? What would you try to say, like, they put a banner in Medborgarplatz here in Stockholm. We can do that mental math of how many people walk through that square with the conversion rate. There's this thesis that I've seen the Chinese push where they think there's at some point your CPIs dip when you cross a certain threshold of spend. If I'm MiHoYo and I push, $150 million down all these channels, that there's just this general awareness that goes up that decreases your threshold to click, which means you actually face lower CPIs, even if we can't draw a direct connection to it. Do you think like those type of arguments hold water? Even if we don't have incrementality evidence behind them, we can still try to evaluate them.
There's competing effects, right? I mean, it depends on, if you're pursuing like truly a saturation campaign, like you're going to run into capacity issues, and the CPMs are going to go way up. I mean, you're competing against yourself essentially. So I mean, there's some, and no one's really explored that whole, like it's difficult because no one is. That's a one shot, right? You can't, you can't test different levels of spend at that scale, right? And so, you'd have to make the case that like, you're not actually just saturating all channels and competing with yourself and driving your CPMs up. So I don't know that you could take that as like a general rule. Now it could be true in some cases, certain levels of spend, but like, I think with a Battlefield, it's interesting because like, when we launched Angry Birds 2, I was a VP at UA at Rovio and we launched Angry Birds 2. And it's like, we spent a lot of money, but we didn't, if we hadn't spent that money, I don't know that it would have made a difference in terms of the original install numbers for that launch, because it was just a high profile launch. And if I was the VP of marketing at Battlefield, I'd say, let's just sit this out for 2 weeks. And then we come in and we do the marketing for the people that we didn't reach in the launch, just like that long tail of people that weren't just already waiting for this game to be launched. And, obviously the platforms have a incentive to promote that game because it's going to drive a lot of revenue for them. So let them do the outreach, and there's going to be a lot of earned media. So like, do we need to even spend money now? What would be the actual incremental value of that? And would we just be poaching people that would have discovered it anyway? That's the part of incrementality. So I think those are just like case by case. I don't know that like Battlefield needs to spend a ton of money on awareness or on, call it like direct response advertising, because I think they just need to make people aware of the fact that this game's coming out and they're going to want to buy it anyway. And you probably have a lot of emails. The platforms are going to assist you because it's in their interest, right? And so, but yeah, I mean, that's why we did the celebrity TV ads. It's like you have this like sort of ambient, you increase like sort of ambient level of awareness, and that makes people more receptive to the ad when they see it. I mean, it worked until it didn't, right? I mean, like was that a successful outcome? I mean, I don't know. I don't think this is like a controversial thing to say it wasn't.
I wanted to return to this idea of incrementality. You mentioned needing to at least understand the metrics and how much you can spend. I mean, basic understanding of return on ad spend in the context of like Web3 and that whole situation 4 or 5 years ago. Billions and billions of dollars being funneled into this industry. I still work in Web3. My whole new thesis is that there was just a complete misunderstanding about, first of all, measuring the return on ad spend. What is the actual value of a customer, and like how much can we spend to acquire a new customer? Did you see a misunderstanding of how UA works in gaming when you were being pitched these Web3 companies? And did, like, when you were getting pitched, what were the things that like didn't pass the sniff test, and were you surprised by the outcome?
Yeah, I mean, I did 2 Web3 investments, right? I did one into a studio that, was probably not doing well. I haven't gotten any updates in a while. It's not a good sign.
Did you get an NFT at least?
No, I didn't. I made one investment in a studio, and I knew the founder. I was kind of just, that wasn't a Web3 investment per se. That was a this person investment. And then I made an investment into a company called Spindle, which got acquired. It was a positive outcome. They got acquired by Coinbase. And the thing is, and so I didn't say yes to any other Web3 investments because to answer your question, no, or yes, I do think that they had a fundamental misapprehension around growing a game. And a lot of these marketing campaigns were just like, well, we'll spin up a Discord, we'll do some token giveaways, and there's going to be a lot of interest, and then that'll turn into like, retained high value, high engagement players. And I just thought that was like a absurd approach, right? But Spindle, they were building essentially like the ads infrastructure for Web3 gaming, really. I mean, that was the kind of principal product category, and like their pitch is very compelling. It's like, look at all of the what better technology could you conjure up for attribution? They were doing attribution, like ads attribution. What better technology could you conjure up for ads attribution than the blockchain? Because look at all the waste in mobile app attribution, because there's like, when you do mobile app attribution, you have multiple attribution calls. Like, it's just waste. If you put it on the blockchain, like every interaction is an entry on the blockchain, so you can trace that path like perfectly, right? With deterministically. And so that made a lot of sense. And then the other part of that, my investment thesis was like, look, if you go back to the history of free to play gaming, none of this took off. This category didn't take off until you had the advertising and measurement and attribution infrastructure in place. So if you think about the sequence of events, right, you had, and I used to know these dates, I'm probably a little fuzzy on them now, but you had Amplifier, which became Unity Ads, I want to say launched in 2010. You had Apps Flyer launched in 2010. You had, I think, Iron Source launched, I think, in 2011. You had Adjust launched in 2010, 2011. You had AppLovin launched in 2010. And then the biggest free-to-play games launched because they could scale, they could grow, right? And so the thesis was like, look, Web3 gaming won't take off until this is in place, until this ads infrastructure is in place, because it didn't take off for free-to-play gaming until that infrastructure was in place. Now, I think the issue with Web3 gaming was it was still too hard. Like, there was no platform that supported discovery very easily. It was still too hard to onboard users. And, I think it just wasn't, just fundamentally wasn't like a mass market product category because of the complexity of, getting a wallet and all the fraud that ended up, sort of taking root, right? So I think those are issues, but nonetheless, I mean, I'm very pleased with my investment in Spindle, and it was a positive investment. I made money, and it was like a 1 year or 18-month holding period. So that's great.
I know exactly how wealthy my player base is. Like I can look into each and every single wallet. I know what they own, where they got it from, who they interact with. I have a graph of every single wallet and who it's trading with, and the programs it's interacting with. It's an incredible amount of insight and data that you have at your disposal. But if nobody is building these products, and I think it was kind of the case that it's in free to play. You had the free to play games were perfected, well, not perfected, but you had these fun experiences that were playable, and then you had the network come in after the fact. With Web3, it was like you had the network and you had all these people who were like, picks and shovels, but there were no actual products. And by the time a product came out, it was like, this is pretty clunky to actually interact with. So perhaps it was mistiming. I'm curious if that understanding of the network being super valuable will lead to a resurgence in Web3. I don't know.
I mean, to be honest, I'm not very familiar with the current state of the Web3 market. I would be happy to hear what you all think on that.
As somebody who works in the industry, it's not great.
It's just impressive how little you can learn after repeated failures. How hard can you fall on your face over and over again? One of the things you wrote a really long time ago was the Ultima Online piece, where you explored kind of old Ultima Online and how it could be applied to Web3. And I thought that piece was fascinating because it's one of the few times I've ever seen you write about core economic or core product problem rather than some of the other things you tend to write about. And I'm curious about why. Like, why don't you write about Call of Duty Warzone? Why don't you write about what they're getting wrong in their game loop? Is that not interesting? Like, you've been around games for so long. I'm sure you would have amazing things to say.
I mean, maybe. I don't know. So first of all, those articles take a long time to write. I mean, there's a lot of research that goes into that. So it's just a function of time.
But you don't go in and shit on like Call of Duty Warzone store, right? Like, I don't know if you've had a chance to visit it, but like there's certain things that I know that you would look at and you'd be like, holy shit, they're getting this right, and they're getting this wrong.
I've spent thousands of dollars on Call of Duty Warzone. I know what they're getting right. I think, I mean, so here's what I don't think is, so I think they overcomplicate the tech trees per season. I think you can make that a lot more simplistic and just like straightforward, and you'd probably make more money. I also think that so they try to pair, it's very obvious that they view the kind of constant content treadmill as a function of getting people to spend money purely for optical reasons, purely for cosmetic reasons, and then, utility. And like, that's actually like really challenging to do. And I think I would probably just get rid of a lot of the cosmetic stuff. And I think if you could imagine having fewer, and this is it sounds like it's contradicting what I just said, but it's not, because their tech trees per season are related to like achievements, right? You have to do these things to unlock the ability to have this other set of things, right? If you got rid of a lot of like the silly cosmetic stuff, you could have guns that were like much more configurable. Like you could have built build outs that were much more configurable. And I think that would actually create like much more of an incentive to really invest. And that would also create a lot more breadth in like strategy. And which I think, a lot of people like are frustrated with Call of Duty Warzone, because a lot of times you see that people that are the best at that game are just kids who are really quick at jumping and like very fast at reacting with their controller. Now, what if you brought in like a much more strategic component to that, and you had guns that were like, just, you didn't need to be the fastest to press the button or the best at jumping. Like you could actually be just have the most strategic use of the combination of the gun and the secondaries. And so that to me feels like maybe an opportunity. I mean, I feel like they're just building this massive base of content that actually doesn't make the game more fun from a strategic standpoint, which I think is leaving a lot of money on the table. It's cosmetics, and it's B, it's like being the first to like exploit some, like a lot of the games are like the guns that come out, they're way too powerful and they get nerfed. And like, I follow a lot of the streamers and like, oh, this gun's really awesome. You got to have it. You have to have it in your loadout right now. It's like, well, no, the gun is obviously, it was just mismanaged. Like they brought this new blueprint, and it's just the dumbest gun ever. It's just like way too powerful, and they're going to nerf it. And so like, I'd rather you have like a smaller universe of guns, but you could actually make they're much more configurable. And I think people would spend a lot more money on that. And it would sort of like mitigate that benefit of just being like really fast at pressing the buttons. I mean, that's why, like, the thing about like esports is like you're aged out of esports by like age 19. Like, you have to be a kid because you just have to be super fast. It's just a reflex. It's a reflex game. And so like, I think you could just bring a lot more people in the tent who are competitive if there was a much more strategic component to that. Like imagine if it was a kind of RTS, and then obviously it's a first person shooter, so you're running around and you have to be like reactive. But like I think Call of Duty gets portrayed as like a strategy game when it's really not. It's a game about like response times.
I asked you this like 3 years ago, and we discussed this a little bit. When I think about games like Call of Duty and Battlefield, why aren't they using performance-based advertising? Like this just blows my mind. Like they have the ability to do this, and nearly all of it is non-direct response, what we might call brand advertising, with budgets that are eye-popping. You know, hundreds of millions of dollars. It just baffles me that is it centripetal force? Like what's holding them? Because I've seen this at Amazon Game Studios. Like we installed the Adjust SDK at one point. Why doesn't this happen more? Does no one care?
Well, I think there's a couple of pieces, right? And it's funny because like whenever I say there's just like I'll talk about just like inefficiencies, right? I just talked about like the brand team that says, oh well, we can't measure it, so like don't even like let's just like we can't measure it, and so therefore we can just spend without any accountability. And people are like, oh, that's a straw man, that doesn't happen. It does happen. I mean, you can't. I think you put your economist hat on, you say, well, no, that would have been eliminated because it's obviously wasteful. No, it doesn't. And so there is just like institutional momentum for that practice. And like you'd say, oh, that can't be the reason, because otherwise these companies that are, very maniacal about efficiency, they would have eliminated that, or they would have made it more. No, that is just the case. You have the person running it for 20 years, and this is always the way they've done it. The other thing is just like the suitability for that with the platform. It's just really hard to do that for console games. Less so on Steam, right? Steam in particular is really difficult to do user acquisition for, because you've got the event horizon and there's no information that can come back, right? Like you get the person onto the game, you can't retrieve anything. There's no ability for a feedback loop to take shape, right? And so that's an issue with PC console. Now that said, there are really smart teams that do user direct response or performance user acquisition for PC console, right? There's companies that specialize in attribution. Now that's probabilistic attribution. There's no deterministic component to that. But still, there are smart companies that do that, right? I worked with WB for a long time, and we did that. I wasn't part of that team, but they did that for the PC console business, right? And so there are smart teams that do it, but it's just there's a lot of institutional momentum, and there's just the platform doesn't lend itself to that.
Yeah, I'm seeing some games use like creator codes to do marketing on Steam, where like you have to enter the creator's code, get a discount to do attribution.
I'll do a little bit of plug. So I'm an advisor for Discord, and we're building the ads product, and this is, I think it's baked in attribution, right? Because people are familiar, but it's the quest system, and so you get rewards. It's almost like the rewarded UA in mobile, and so that's a really good way to do attribution. Who saw the ad and who collected the reward, and I can map those two things.
I've been holding on tight to that one. I've got hope. I've got faith. I just need more ad inventory to like get more games on it. It's like people are ready to spend in HD. Like I think there's been a lot of businesses, especially like the failed VC cohorts. There's been a lot of businesses that are still able to persist and are having stable DAUs. Like they're not $100 million products yet,
Right.
but they're hitting like 50 million ARR, and like they want to grow through marketing, and they just don't know how to do it. They just at a loss, which is a real shame.
Well, there's a lot of mobile companies that want to spend. They just can't. I mean, they're just constrained, right? I mean, that's why I think the rewarded space took off to the degree that it did. I mean, there's just so much pent up demand for new inventory, and if you added measurement in, then that's great. People will spend, and they'll spend a lot. So I mean, I think kind of counterintuitively, I think now would probably be a good time to launch a mobile ad network.
A question about kind of marginal analysis here. It seems to me most performance marketers look at average ROAS, whereas you expect you should, economics says you should look at marginal impacts. Does the market have standard market dynamics, increasing marginal cost, decreasing marginal LTV, or why aren't they looking at the margins?
Some companies do. I wrote a piece about this a month ago, optimization models for digital marketing. And I talked about that. Like, what are you optimizing for? Are you optimizing for, so what's your constraint, right? I just presented this as two different optimization problems. So my constraint is marginal ROAS, should be for most people. I don't want to, the average is irrelevant to me because there's going to be a lot, if I just looked at that on a monthly basis, I probably wasted a lot of money. So that should be the constraint. It's just that marginal ROAS, that cap. And then, so for a lot of companies, if you go to a lot of mobile companies, and this is probably more true back in the golden era of free-to-play gaming, which was, free-to-play mobile gaming, which was probably 2014 to 2017. 2018 maybe, where you'd go to a studio and say, we have no budget. Budget is we could go to our VCs and get $50 million tomorrow if we could show a model that says we'd be spending that profitably, right? And so when you are in that position, and no one's truly in that position because you can't spend 10 billion this month, right? Like, there's other constraints there. But like, if you'd say you'd put a soft cap on that, like I could probably spend like up to $100 million in a month without like absolutely destroying my unit economics, right? For some game, right? Okay, well, then you're not concerned about, there's no budget constraint, right? Then the constraint is the marginal ROAS. That's what you're really, that's what you really care about, right? And then there is, now it's more common to see people say, well, when we are budget constrained, we're gonna spend this much. And, we understand that we're leaving money on the table, but that's fine. Like, so then you're just looking at it, it's a different optimization problem. The constraint is the budget, right? And then you're just trying to max out ROAS. You might have a ROAS target, which is 120, but the budget constraint results in, and so then what are you trying to do? Well, you're trying to max ROAS across all the channels. And so you're trying to distribute money such that happens, right? So like, it might turn out that I have like 150% blended ROAS across the board this month, but because I was budget constrained, I couldn't spend more than that. And usually you'd want that to be 120 at the margin. For the next dollar that was spent, it would be 119.9 or something. So that you hit the marginal constraint. But in any case, like the budget constraint or the hard ROAS constraint, that's driven by marginal ROAS, not average. Average is almost irrelevant.
Yeah. But are people actually looking at and measuring marginal ROAS, or is, because when I've looked at UA reports, I'm not super deep in it. It's always spitting back averages.
No, I mean, so again, there's institutional momentum, and UA is weird because I started this like website a while back called QuantMar, and I had this idea that like if you look at the sums of money being spent by some UA teams, I mean, it just rivals capital under management, assets under management to some small hedge funds. Why aren't UA people being paid? Like, why are they not being compensated like that? Like hedge funds, like a PM at a hedge fund, like, or a PM at a portfolio manager within a pod at a hedge fund. They might have less capital under management, assets under management than what like a UA team for a really scaled game spends in a month, or certainly in a year, right? And so like, why aren't they compensated like that? Well, they don't have the same skill set. That's why they're not competing for those jobs. You're not competing with the hedge fund for those people. It's a different group of people that's coming into it. And so I think, I'll tell this to people like, yeah, people don't really look at marginal ROAS. And like, how is that possible? That sounds totally inefficient. You can't be correct. That would have been solved for already. No, it hasn't. Most people look at average, and it's like, yeah. You understand that if that average came in right at the ROAS target, you probably wasted a lot of money that month. And people will say, what do you mean? I don't understand. And then you start talking about average. I mean, it's just, it can be shocking in some cases, but some teams do.
Yeah.
If we talk about the free-to-play model, it's been relevant towards games, not towards other apps by and large. Why does this model emerge for games and not for other ad products or other app products?
Yeah, that's a great question. I think there's a couple reasons. One is freemium certainly is utilized by a lot of other product categories.
Shareware though, right? One-time purchase stuff, like not true LTV building.
Right. And so in the book, I mean, the three examples I give at the outset are Candy Crush, which obviously a game, and then Spotify and Skype. Right, which Skype's implementation of free to play. So I was working at Skype, like right at a grad school, and that's when I sort of caught the free to play bug or the freemium bug, because they were implementing it, but I thought in just a very superficial way. Really, it was just free to use, and you could buy a phone number. So and I think it was a subscription. So I think you paid every month, but like you'd have a phone number. So if people called the phone number, it would ring your Skype. So if you're on your phone and you're on Wi-Fi or whatever, like this was before kind of pre-smartphones, but more typically you'd be on your desktop. And so then I looked across, the Baltic Sea, and I saw these Finnish gaming companies doing really cool stuff with free play. And that's how I got into gaming. But why does it work better for games? I think, well, gaming is a total sandbox. You can make a game be whatever you want. I mean, you're not bound by the laws of physics. You're not bound by, any sort of like, constraints related to like realism or whatever. You could have a game about zombies. They don't exist. You could have a game about time travel that doesn't exist. Right. And so you can make a game, whatever you want, and you can monetize it through whatever means you want and selling whatever you want. You can make whatever consumable, you can make whatever cosmetic item you want. You can just conjure it up and sell it and put it right there. And so you can make that catalog of things to purchase much more diverse and broad, and therefore relevant to different groups, right? And you take that to its logical extreme, you could make products specifically for a person now using generative tools based on what you know about them. And I think that's what's really so exciting about the shift to web stores, but that's like maybe an aside. So I think that's just the reason. I mean, with Spotify, what are you going to do? I mean, you can think of ways like to bundle access.
if I think about the transition from selling individual songs, right, would be more consistent with an MTX model or like an IAP model versus the subscription all-you-can-eat Spotify model. Like, even if we just take that comparison, that felt very value destructive to me, moving from the single song purchase to the subscription. But I think about the parallel story in games, like Game Pass. Game Pass would have been the same narrative if it had taken off, but it failed. So there seems to be a difference, something fundamental between those two things when I think about those two models.
But I think, so I mean, that's iTunes, right? I mean, iTunes, you can buy songs. It's like, why did Spotify succeed where iTunes failed? I think it's just the ease of use, right? Like, and first of all, you need the freemium, the free to play. I mean, there's got to be something that's free. So it can't be you just get into the software and everything costs money that's what iTunes is. So like, then what's free and what's not? Now, you could think about like with Spotify, maybe everything's free, but there's ads. Well, that's freemium in a sense, right? And that exists. They have that tier. Or you could say, well, everything's free, but if you want to build a playlist, to pay money, you have to buy the playlist ability to do that. And I think, like, I'm sure maybe they modeled some of this out. Actually, they probably didn't. They probably just said subscriptions are really nice because it's like reliable recurring revenue. And that was the business model. And I think if someone tried to come in and say, hey, well, let's actually play around with some free to play concepts, they just wouldn't be allowed to do that because you can't really disrupt the business model in that way. But
even when I think about Twitch, we could think about other platforms, but when I think about people that have tried to make more MTX based models, leveling up servers or buying character cosmetics for Twitch, something along those lines, it still feels like the game MTX IP model has actually failed these other paradigms. Like, if it was successful, why isn't it, like a classic game theory model where it's reproducing and it's taking over? Where's the imperialism from the model if it's as successful as? I mean, I think it should. I've been stunned it hasn't taken over more things.
So let me go back to the Spotify example though, because there's another fundamental impediment there, which is that licensing costs. So you can't give away too much music for free because you've got to recover the licensing costs, right? So that's an issue. It's not. So one of the sort of fundamental properties of free to play is that there's zero marginal cost of distribution. So you have to be able to just replicate the software and sell it. And then with Spotify, that's not true because every time you replicate, every time someone downloads the Spotify app, they're sort of accessing this pool of content that you have to pay for as a result of them consuming it, right? Which is not true with gaming. I mean, maybe very tiny amounts based on like server costs or whatever. But so I think that's another issue. But I still do think it's with games, you can conjure up whatever you want. I mean, there's no constraints. There's no limitations there. What you could present to be purchased by the user in terms of like, and you go back to like the typical implementation and there's the soft currency, hard currency paradigm. But even then, I mean, whatever you're buying after that, you could just be whatever you want. It could be skulls. It could be crystal dust. It could be whatever you want. Whereas when you're selling something, you're limited by the appeal of the thing. But like I can make anything in a free to play game and I can give you any amount I want. I can price that however I want. It's just a total blank canvas. And I think that's probably why it worked in free. And then the other thing is the scale, right? So now you say, well, okay, but then why didn't that work on console? Because the console scale of the player base on console and even PC is much smaller than what could be on mobile. And mobile is everyone. But on PC console, it's actually pretty limited. And there's the hardware hurdle, right? And whereas you've got a hardware hurdle with phone, but not for the gaming use case. Everyone has a phone.
So if I just think about social platforms, so we think about like Discord, which just try to monetize platform economics, and Twitch, like cosmetics. But then I think about like TikTok, Facebook, Twitter, the blue check mark, the fabled blue check mark. It feels strange to me there's no monetization tentacles into what is essentially a status game. If you look at that as a game economist, it just feels baffling to me that there isn't deeper tentacles in those things. Or even when I look at like the Twitch and Discord examples, like that hasn't been enough to deliver them to the promised land. It has to be advertising that gets them there. Like they're barely break even in a lot of these paradigms. And I'm surprised by that. And I get, is there something we're missing? Because I feel like you can do those things on social platforms, right? We can play with status. We can do server upgrades or cosmetics.
So it's not just status though. The blue check also impacts your distribution now, right? So like, I mean, I wrote about this. It was like, I can't remember the name I gave it, but it was like, there was I invoked some concept from like John Locke, but anyway, it was the idea that we always agreed with social media. My distribution is a function of the ideas that I disseminate. It's not limited by what I'm paying or not. Like, and that was broken. I think it was, I called it like, I don't think I called it the social contract, but anyway, that was broken. And I made the point that was broken because of ATT, because you couldn't do that. You couldn't advertise to people in the same way anymore. So a lot of these people lost ARPU. And so you just kind of had to break that contract and say, well, you want mass distribution, now you got to pay for it. And so there's more than just status with the blue checks a lot of the time. But yeah, I don't know. I mean, what could Twitch offer? Because you're constrained then by just the product. I mean, what could they offer? I mean, because it's cosmetics, you don't really make that much money. It's got to be something that's fundamental to the experience. Like, is it minutes consumed? Because then you're talking about metering. That's not really the same, And so, like, how do you augment the experience? Because another fundamental principle of free to play and freemium is that what you want to do is you want to match the value that a user perceives from something with the amount of money that you're charging them for it, right? Such that, like, I could just scale that up endlessly if I could figure out a way to deliver more value. That's whale behavior. Right. But how do you do that with Twitch? I mean, it's just like there's only how do you make that a more valuable experience? Because a lot of it's just like cosmetics or tipping or stuff like that. It's not making it fundamentally more valuable to me as a consumer, as a user.
This idea here about like kind of like game genre UA fatalism, where like a lot of people will say stuff like, okay, so ROAS is what dictates what games get to market and who can scale. And games that just cannot compete on ROAS are doomed to fail. And so one example, for example, is like if Tetris launched today, they'd be competing with Candy Crush. Candy Crush has much higher LTV. They're marketing towards a similar audience because they're both kind of colorful, abstract puzzle games. And Tetris would just never succeed because they would get outbid by Candy Crush every time and fail. And that basically ROAS dictates what games are successful or not. I don't know. How much do you buy into this thesis? Like, I see it a lot when people try to justify why their game failed, but
yeah, that just sounds like a post hoc justification to me. I mean, there's no ROAS determinism, or it's ROAS determinism. It's not LTV determinism, because you could have 150% ROAS on a 7-cent LTV, right? If you're buying installs at 5 cents. And so then the question is like, well, why are you chasing this competitive market and scale too? It's like, if you can appeal better to some, even if it's a very competitive space, even this very competitive segment based on the audience that's being pursued, if you can appeal better, your click-throughs are going to be lower, the costs are going to be lower, you could have lower LTV, you could have higher ROAS. So it's like, I think I think when people talk about like, oh, well, we couldn't compete with the CPIs that Candy Crush is paying, that's nonsense. That doesn't make any sense. The CPIs are not what you're competing against. You're competing against the relevance. You're competing against the willingness to click. You're competing against the audience size. You're competing against your own ability to monetize. So you're saying the CPIs are higher. It sounds like you suck at monetizing. It's not an advertising problem. It's a you problem. It's a monetization problem, or it's an audience problem.
Do you buy into predatory pricing? I mean, I know this is always a critique that comes up in certain markets, but I hear it rarely brought up in mobile advertising that people are just basically buying break even or neutral traffic to suck up the market, right? There's almost like a crowding out effect. Do you think there's anything to this, or it's all just hogwash?
I don't think anybody is. I don't know. I don't think anybody is deliberately crowding people out, or I mean, so like in order to do that, you'd have to believe that you'd actually kill off the competition, but you wouldn't. Mm-hmm. I mean, you just get more people lining up. I mean, if once you might kill off some existing set of companies by crowding them out, but then, they stop competing and the ad prices drop and then more people enter because it's an attractive space. So like, it's not, I don't know that you could permanently kill off the competition, because remember, like there's almost no hurdle to make a game, especially now, right? I mean, you could have 3 people get carved out of a studio to go make some game because you perceive there to be an opportunity. And
there's not like railroads or oil refineries, right?
Exactly. Yeah.
You're talking about KPIs a lot, and obviously you're an investor. I'm curious, 2 questions. The first one, if you had to pick a KPI that you were judging a company based off of, which one would it be? And then is that something that's even a part of your investment thesis? How do you make decisions in terms of what's investment in 2025?
Well, so I invest company formation stage, right? So there's never any data, except what exceptional things has the founding team done, ideally together. And so I think, building a successful startup, I mean, that's incredibly challenging to do. It's an exceptional feat. You're telling me that you endeavor to do something absolutely exceptional.
Yep.
And so, well, what's the track record of doing exceptional things? And like, so this, and this maybe is controversial, but there's any number of exceptional things. Like, exceptional things they're not, it need not only pertain to like how much money you've made at a company or whatever. Did you get into a really good school? That's an exceptional thing to do. That I would count that.
He said with the Harvard flag behind him.
I mean, okay, maybe that's elitist, but that's a signal. And now if you went to an but it's also like the difference of like, did you go to some, impressive Ivy League school because you went to Phillips Exeter, or did you get into some impressive Ivy League school going to the high school that I went to that, was sucked? And so that would be that's an exceptional thing to do. I'm just making the point that there's a sort of like broad set of things that you could do that I would consider to be exceptional. But the thing is, like, did you work as employee number, 17,000 at King? Is that truly exceptional? I mean, if you, we launched Candy Crush. Great. That's exceptional. Now, I joined Candy Crush, 12 years after it was launched, and I worked on something. I was, well, okay. So the thing is like, well, no, and you can say, well, hey, like, what did, and people, this is like a just flawed logic, but people, then you're going to miss the next Mark Zuckerberg. No, I wouldn't. He did Exeter or Harvard, so maybe I don't think that's exceptional. Okay, fine. But like, you mean the once in a lifetime world historical figure? Maybe I would miss that based on this rubric. But the thing is like, well, and then you're saying, well, hey, I never had the opportunity to do exceptional things. Okay, well then now you do right this second. You can go and join some company and like launch I just think like there's just things I need to see that you've accomplished, because the hardest thing to do is to launch a game. And just go be this. You know how hard launching a game is? To getting from nothing to the point where you have an MVP and pushing that out. You know how many game companies I've seen die where they had something that was kind of playable. They were just too embarrassed, or they were just too paralyzed by anxiety or just analysis paralysis to actually launch it and start iterating on it. I need to see that you've done something, that you've completed something from start to finish. Now, I'm not making the point that you have to have a degree. That was not the point I was trying to make. I hope that comes across. But that's just a wide variety of examples that if you yourself have done this thing that was improbable. And if you've done that, then like, I think like where people make a mistake, they might get funded. I mean, certainly this was the case like 2021, like companies were spinning out of these big companies and they were raising a lot of money. And, it's because that company was impressive. But with the things that they did there were maybe not that impressive. And like, that's not really possible to do that anymore. But like, yeah, that's what I want to see. That's the KPI. It's like and ideally as a team, this group as a team accomplished something exceptional. And therefore I believe that they have the capacity to do that. But if it's just a kind of a string of jobs and you were just sort of like, you came in and it was already a successful product and you scaled it a little bit, that to me, that doesn't communicate the ability to do 0 to 1. Like, which you're going to have to do, especially if you're launching a game, but really with any startup.
So failures are for you a bad signal?
I don't want to say on their own they're a bad signal. I would say if a person doesn't have any successes, it's probably not. And that's not to say that person's like a loser or something, or there's something wrong with them. It's my what I would say to them is like, go start a product in a bigger company. You have the chance, like you can do that right this second, and then talk about starting your own company. But like, to me, I'm just not seeing the track record of having completed something. But it's not to say it's not to say that you can't do that. I'm not saying I'm not saying you're incapable of doing it. I'm saying I don't see any proof that you can do it. And those are two very different things, right?
Yeah.
And if I don't see any proof that you can do it, how do I take the risk? Like, show me proof that you can do it, and then I'll feel comfortable with that risk.
No, just slightly against this narrative that I see. It's like failure, is amazing. Like fail, which like, yes, you have to fail in order to succeed. But I feel like it trivializes it doesn't encourage failure, but it's like, oh, failure is whatever. It's a part of the process. It is, but it's not what we should strive for.
Right. So, I would say like some history, I mean, I've failed at a lot of stuff. Failure is not disqualifying. But it's also not a proof point that you're capable of doing exceptional things. And so therefore I just kind of ignore it.
Is Web3 the subcontext here, Chris?
No subcontext. No subcontext.
Keep getting money, Chris. Our guest today has been Eric Seufert. You can find him at Mobile Dev Memo. You're on Twitter. You're on Ben Thompson's podcast. I love listening to you there, by the way. I hope you get a regular seat. Sharp Ad Tech would sound nice. Is there any other way people get in touch with you for investment?
You can just reach out. I'm on LinkedIn a lot. LinkedIn and X and Threads are like my primary channels. Just reach out. I'm always happy to chat with people.
Thank you so much for being here. We appreciate it.
Yeah, take care, guys. This is fun.
We should teach this to our children. Economics is major. Everyone has to major in economics. Number one, for personal survival. Economics is major.